what the tax exemption bill proposes is very simple in the end. It's simply a timing change. It is not an extension of benefit or any added costs or anything like that. It's simply getting the veterans the benefit that they've already earned at the time they need it most. Veterans are already exempt from all or part of the real estate taxes in all of the states that we're initially targeting. Currently, they cannot apply for that exemption until after they own the home. The problem it causes is that during the mortgage underwriting process, because they're not technically exempt until a month or two after they own the home, after it's processed, underwriting still has to count those taxes against the veteran in their debt to income ratio, which really determines how much home they qualify for at the end of the day. So it reduces their buying power drastically. And furthermore, it means that they have to collect a bunch of tax escrows at closing that are simply going to get refunded back to them afterwards. All the bill does is say, instead of having to wait until you own the home to apply for the exemption, you can apply after you're under contract and have it approved prior to owning the home, so you can cleanly present a very simple document to the underwriter that shows that you are exempt from these taxes, and then they don't have to count it against your debt to income ratio. This change frees up, depending on what state you're in, anywhere from $10,000 to over $100,000 in buying power. But even on the veterans where that extra buying power wouldn't actually be used, their transaction is unnecessarily tighter than it needs to be, meaning that because the taxes are being counted against them, they might still qualify, but man, their debt to income ratio is really tight. So their transaction is being scrutinized much harder than it should be. Where if those taxes were freed up, the underwriter would say, oh, they have plenty of cushion, and it would fly through a lot faster and frankly, be a less stressful process for the disabled veteran, even though it doesn't actually free up any more qualification. It would just streamline everything more, knowing that they have that extra cushion. So even for the veterans that aren't currently technically impacted by the current law, it still sure as heck would make their life a lot easier.
Not only does it free up buying power for disabled veterans in an incredibly aggressive and competitive home buying market, it also ensures that even if you don't need more money to buy the home that you're looking at, that you're not being scrutinized unnecessarily to ensure that the qualifications that you've put together actually meet the standards of the underwriter that's reviewing the file. Say none of those things matter in the simplest version of the benefit of this, you now have extra cash on hand to be able to afford any of the other moving expenses that are affiliated with buying a new property. You might need to furnish your home. You may need to move yourself or your family across the country. You might need to get settled in a new community or make repairs around the home or invest into the property by updating or upgrading certain areas that you didn't love when you first decided to buy it. All of those things cost money. And if cash is leaving the buyer's hand, our veteran's hand, and going somewhere that's just going to get returned later, you're delaying that process of settling into your home by waiting for something that's going to happen anyway. So there's no reason for money to come out of hands, to go into other hands, to just turn around and come back to where it initially started. That cash should stay on hand the entire time to ensure that not just the lending process, but the actual moving and settling and getting into your community process is done with as much availability of funds as possible.
In Maryland, it was very straightforward. HB 809 is the name of the bill. And in most of the states that we're targeting, you could literally take Maryland out and replace it with your state, and bam, you have a bill. All that it did was take the timing of the benefit and say that instead of waiting until after you own the home to apply for the benefit, you can apply once you're under contract and is approved prior to closing. So usually about a 30-day window. That is it, easy peasy. It was incredibly popular. It went from a conversation to sign law in less than a year. It was bipartisan. It was unanimous. The co-signers could not line up quickly enough. I think in the final bill, there were 16 co-signers. And it is truly a win-win. It helps disabled veterans become homeowners, a very popular topic, and group to help. And it does so at zero cost and no undue logistical burden on the state. So it helps people and it doesn't cost any money. It's as good as it gets as far as state politics are concerned.